Good morning, everybody. Well, a little stall here. Wondering, is that the end? I mean, buying right into the close yesterday was impressive. And we'll see how far it goes here today, how much things pull back. Looking at the S&Ps here, it's really no big deal. A little bit of a rest this morning, a start of some rest anyway. And, yesterday we spoke about the support here, that's the key level. And we got a wide range bar yesterday. So a little breakout of this little range there, which did not fail. So we continue with our factory work, and while recognizing that risk is increasing on the long side. The momentum started here, resting, correction bar, more momentum, stronger momentum. When you get stronger momentum, you pull away from the launching pad, and that pulls away from the moving average, and the moving averages begin to separate more and more. So this is how we assess increasing risk, besides market internals, which have been not really telling us a whole heck of a lot, other than the fact that the breadth has been narrow, which we haven't looked at in a little while, but here you go. And if you were just looking at these two pieces of information, you would never want to participate in what's going on here. But these aren't what we trade. This is what we trade. And the trend is up, and it's super strong. And you can see it hasn't even broken a prior day's low, except for right here during this move up. And breadth is narrow as it has been. This can't move. Now it's up at the zero line, which at times, if this was a bear market and this trend was down, this would be a minor sell signal when breadth reaches the zero line, and you've got sentiment, which would probably never be up here in a bear market. So you can see sentiment has just been crazy, and they've been right. I don't, because of, other than this momentum move, I don't really know. I guess if you were, calls that were dated with plenty of time premium, where the premium just didn't get crushed because of the time evaporation, and you went further out, which this really isn't looking at that. You did really well, right? But if you had shorter dated ones, unless you got on board here, well, this sideways kind of chop just killed you. Anyway, the internals here would not, they're not all that helpful, other than to know what we know, that fangs and internet stocks, narrow group of stocks in the NASDAQ is driving this market. And we've been talking about catch up, and that's happened where the transports have played some catch up, and we'll see how far it goes. But now that we've got this wide range bar, we go to our factory work. And so now, well, that line, of course, we don't want to really get rid of that line, so let's just duplicate it and just kind of say, this is what we do. We've got a wide range bar. It came out of a consolidation. We'd like to see whatever corrective action happens stay in the upper half, in the middle. So we can do this just to eyeball it, and lo and behold, at this time it lines up with what we call minor support. So kind of a good guess there, just in the middle. It doesn't always line up that way. Sometimes it's just a clear void when you get a wide range bar like that. So we'll see if it holds this area. As it pulls back, this is where buyers should want to step up. And so now that we've got the little double top up there, 2 pivot highs on the hourly, it's created some resistance. So we may be looking at a choppy day here, which would probably be, well, not probably, it would be good for the bullish case. And obviously what would be bad for the bearish case would be a close under that green bar's low. Now, it wouldn't violate the trend, but we all know that big red bar closing under the low of a big green bar isn't going to be a good sign. So we'll just have to see where this all goes. Looking at the Qs, the NASDAQ futures, now we're beginning to get a 3-bar reversal possibly. Right? As I say every day, it's early. I don't know where this bar is going to end, and nor does anybody else. So as this comes down toward this pivot low, it fell from the high. Let's hope it keeps falling all the way down to the low. Because why would I want to see that? Because as this gets extended on a short-term basis here, it gives us as intraday traders a reference point to go long, looking for a bounce. Now, deep retracements like this suggest that today, anyway, it's not going back up there. But would we have thought after this fell like a bag of rocks off the roof that it would go right back up to the high without stalling? Well, in this market, maybe, but that typically isn't the case after you get a drop with that kind of momentum where someone yelled fire, in a crowded room and everybody hit the sell button. And then it's like, oh, it was a joke. Everybody got back in again. So then it hit resistance and here we go. And you see the range is beginning to expand. And that's exactly what we want to see is the selling pick up and a range expansion. So the same as prices are going higher, excuse me, where we see a range expansion on the way up, that suggests a stall in the momentum. You see, that's what happened over here. Same thing on the way down. As prices are dropping and we see a range expansion into an area of support, we anticipate that there's going to be a turn, and that's when we go down to our smaller time frame and we start looking for patterns like breakdown failures, maybe a larger pattern, a W bottom, which would signal a larger move because of the little bit more of a time consolidation there. So that would be our reference point. Now, if it looks like this at the end of the day, right, it's not going to take any rocket science. It's not going to take any Ichikumi cloud or any proprietary indicators to say that that's a bearish reversal in a chart that's short-term extended, suggesting it's going to pull back. So we'll see where that ends at the end of the day. YM holding up there very nicely, but this has been one of the laggards. Now it's right up here. Now it'll be interesting as I'm looking at this, and of course I look at different things, I get other thoughts, is that this continues to show relative strength while the NASDAQ starts to show relative weakness, right? Money coming out of the strong ones. The Dow pops and makes a new all-time high, sucks in the last of the holdouts or doubters. And from there, the theme that I started with at the beginning of the week, and in the newsletter over the weekend, I was looking for this exactly to happen, this acceleration to the upside. We still don't have the breadth, confirmation. I kind of doubt that that's going to happen this week now. I mean, but the Dow making a new all-time high, and as we get into, we're into September here, the beginning, but maybe into the end of the first week or so, maybe we get that historic, ugly September, which is supposed to be the worst month of the year historically. And we'll see if that historic piece of information actually follows through this year. Seasonality is one piece of information. You can't hang your hat on it or, go and make bets on it. I guess some people do. But until you actually get price confirmation to anything, whether it's market internals or seasonality, it's foolish to risk money without the price pattern. And it just amazes us, especially on the option trader side, that people place trades without charts. All right, the Russell, another laggard, holding up nicely. So the money's coming out of what was strong or stronger, and what was weaker is kind of holding up here. So this is something we want to see if the Qs get all the way down to this pivot and begin to stabilize. But the Russell is still hanging tough up here, and the Qs begin to rally. This just might be a better bet, a better trade, because this was showing relative strength. It doesn't mean the Qs won't bounce, and that could be considered. But if this continues to show relative strength, it might just take off, as well as the Dow, which is holding up nicely, pretty much the same. Bonds are up here a little bit, coming off of the low. Right? Where are we here? Right. Pivot low there. So you don't need no trend lines. Just look to the left. Right. Where's it going to stop? Just look over there. Yeah, CL. Finally, it moves. And I did see some news this morning. I forget what it was, looking at some other things. And anyway, so finally a little break here. And I should have the current contract. This was the craziness that went over there several months ago. But this might be just the start of something bigger on the downside there, which does support this bias that if the market is going to start a correction this month, oil starts to fall. The alignment of that could just play out. And you know what? It's making me think here. The euro has been stalling up here. And what I suggest you all do is to see if that actually breaks. Because if this is coming down, the dollar is going up, and right, to some degree. And if the dollar starts to rally, oil starts to fall, markets getting a little toppy, we may have a pretty good type of perfect storm for a correction. Which, as strong as the market is, corrections are good. Create buying opportunities, but being aware of them, you might want to sell covered calls, to protect long-term positions. Maybe even buy a put on a long-term position to profit if you think it's going to go down. So different strategies for different markets. Gold, still correcting. I mentioned yesterday the misalignment between the weekly and the daily, and this is just going sideways. So really nothing going on there for the moment. Silver coming in a little bit. So just choppy price action there as well. And transports popped yesterday. They look great. And look, the same idea. Do we get a red bar that might take out today's low? And we'll assess all of that. But, if we can get the Dow continuing to show the strength and the transports going up and the Russell kicking it in, look at the Dow, with the industrials, not the futures. It just looks like, it's just ready to continue to soar. So maybe 30,000 is coming. We'll see. But, the same story, same factory work. Ideally, whatever happens today, it stays in the upper half of that wide range bar, and it doesn't come anywhere near the bottom of that wide range bar. So there you have it. We'll see how it unfolds today. And Dan, see what's on your list of gappers and open positions. Some of those longs we have to keep an eye, and maybe they get a little danger today. We'll see where this goes.
All right, good morning. Yeah, the longs that we've been adding, we were very specific of the new types of longs that we would buy. We weren't buying any extended NASDAQ stocks. We were not playing the get on board the moving train. We were only interested in things kind of like this. I don't know why I'm looking at Boyd, but kind of like this, were the new ones. It is a bullish consolidation here. Red bar ignored and then broke out. So all our opens are actually fine. We're we have trailing stops. We have call spreads on T2, and that looks fine. It's going to expire tomorrow. Piton, we gap and crap, climactic sell setup. We got a call spread there. I just tightened the stop. That should be home free. Ali, if you change your drop down, all panelists and attendees. So I'm not going to review the opens. We have a ton of opens. So just ask me if you have any questions. Actually, our RCL cruise line, we're core long with a covered call. Look at this. We're short the 70 calls that expire tomorrow. If folks, textbook, let's say it was 3:58 p.m. tomorrow, Friday expiration, we're short the $70 calls, and this closes at 69.85. That is textbook of how you want to use covered calls, because we're profiting on the underlying, and then we make 100% of the short call. And then we'd make a decision of, do we want to sell another one for next week? So we'll do that same analysis tomorrow. But yeah, we've been in these cruise ships for a while. Bottoming patterns. So I'm going to continue with gappers here. Yeah, Boyd, I put it here for some reason, but it looks good. That's worth watching. Tesla getting whacked. And, I put out on our Facebook group the signs have extended. I mentioned, hey, this crazy run post split announcement. This was the announcement day. Crazy, crazy run, wide range ending, red bar. We showed this in MT Live yesterday. Signs of short-term exhaustion, daily, weekly, monthly. I think I saw on the news some big investor was cutting the exposure, so that could be part of it, but there's weakness across everything in the NASDAQ. FGen, a beautiful 1, 2, 3 yesterday, although, at resistance, gapping up to 51, big gap, nothing to do. ACPA, you sound like a bio, and you're getting your head chopped off here. Look at that, $10 down to 275 with a bearish pre-market. That is ugly. KCAC, recent IPO. Wow, gapping up to almost 16 bucks. Wow. I don't know what they do. Well, that's impressive. This was on our list, Zuo for being extended. Beautiful, beautiful 1, 2, 3 down here. Beautiful 1, 2, 3. Well, from consolidation, you got all the flat MAs, and that's a wide range igniting bar. And the 1, 2, 3 just made it more beautiful. Smart, 55 bucks, bearish gap down here. Call spread candidate. Oh, so I mentioned the Qs. The Qs look like a call spread candidate. Yeah, big old, for you Steve Nissan candlestick labeling people. It's not a hanging man because the low is not a higher low, but it's still the bearish reversal bar. Long tail like that. I don't know what the name is, but now we're getting follow through to the downside. So sure, let's sell out of the money call spread. Oh, I know why I have Boyd here. Because it was a typo. I was trying to type beyond. So beyond, let's keep an eye on this for a put spread, particularly if we can sell it for tomorrow. William C. 52. Yeah, I like it actually. Yeah. Yeah, that looks good. I'm going to put that in this little window right here. But nice bottoming action, little breakdown failure. So yeah, that's going on the list. All right, YouTube's asking about a couple stocks here. Smart, we just looked at Amazon and ABC. Amazon was in a bullet. It broke out of this big ascending triangle, which is where we got our subscribers into it long. And a put spread, it's churning up, but now it's a bearish gap pretty much to yesterday's low. I would stay away from NASDAQ stocks here, at least for swings. And for a day trade, no compelling setup whatsoever based on this bearish gap. So I got nothing for you there. ABC had a night. This is a 180 reversal, but it's to resistance. So not a great setup, and I can't tell where it's gapping, but put spread. I love put spreads on 180 reversals. Some more banks, BAC. Did I say that? BAC? JP, you're making me laugh. JP Morgan. Let's see, that's right to resistance there. I'd like to see better. I like to see better because of this price void over here. So yeah, let's keep an eye on C, Charlie. Papa Delta did break out, bearish reversal, gap down to 27 bucks. Wow, that's an ugly gap. Wow. Gapping under major support. That's ugly. PVH. Sure. Go through the checklist. Tell me what you got after the market opens and the spreads contract a little bit. But I got the market's overbought, bearish pre-market. We got to be very selective on new longs. Rish Hub, if you can put your drop down, all panelists and attendees. He's asking me about this. W287, it's a bearish gap down and it's rolled over. So that could be a day trade short. Yeah, W Whiskey. That's one we actually showed in MT Live yesterday about this crazy run. Look at that, from 30 bucks to 350, people at home buying furniture and sheets and whatever they sell. Overstock. We nailed this on the gap down up here. Extended all time frames. But now you're just getting on board a moving train that's going down. So it's just a continuation pattern. MDW, it did break out, bearish retracement. I got nothing there. This gapped up to resistance, got nothing. These are earnings stocks. Crowd got overbought, little gap and crap yesterday, 128. We've been saying every day, we've been trading the momentum, but we said musical chairs, keep one eye out the exit door. And yesterday at 10 a.m., we talked about the NASDAQ saying, look, this was the most amount of selling in 30 minutes in over 2 weeks. And then, they rallied a lot into the close, which put our bias into question. But do you all remember that discussion we had about just the range and what the range meant intraday? Do y'all remember we talked about this? That look, controlled, violent intraday fighting, violent. So violent intraday fighting after it's extended is a sign of possible, pullback. It's right there in green and red. You can see the intraday fights of the bulls and the bears. Correct, power hammer did. So another one here, broke out, ugly day yesterday, gapping down. Here, nothing to do with this. Rocket Man, Greg, your Rocket Man had earnings. Gapping down, no pattern. No pattern. No pattern. Saber. A little possible gap down failure, but no pattern. There's the PVH that McGraw mentioned. Looks good. 5. Relative strength. The gap's too big though, but daily, weekly, I wish it wasn't gapping so big, because that's a beautiful daily, weekly breakout. Costco same store sales were up. That's grinding higher to all-time highs. Kirk, if this can get over yesterday's red bar, then it looks higher. It had earnings. Cuervo Gold, I don't know what to do with that. It's, you know, a bear gap under the real body, but still trading range. Let's see, Andres is asking about Andres Momo, and then somebody else, Focus. Momo, big nasty gap to support. You know, when things are big like that, I don't know which way it's going to go. You just got to put it in a 5-minute window and see what happens over 30 minutes. Space put spread, no. We actually were short naked 1650 puts that expire tomorrow, and we stopped out of them at a gain yesterday. But no, we're in a downtrend, and it just made a lower pivot. It cracked support yesterday. FOCS. Asking for a put spread. No, it's lower lows, lower highs, rally, stalling. No, I still have a nice list of bullish setups from yesterday that are much better than these. Hey, Jake, look at our ZBH relative strength. I mean, just the fact that it's holding its closing price in this market is very impressive. Twitter, all right, we sold 1/3 of our Twitter at the high. I'm not going to turn this into a loser. We still have an open gain because we entered the bear sandwich here. So we still have an open 60-cent gain. So let's move stop 5-minute low.